Welcome to Rich Mind Channel. Investing your money can be life-changing, but where should you put it? Stocks? Crypto? Real estate? These are the questions I get asked all the time, and for good reason. That's why in this video we're diving deep into the ring to witness a legendary showdown. Stocks versus crypto versus real estate. We'll break down each of these investment options, compare their pros and cons, and help you decide which one or ones are right for you. Let's get started. Chapter 1. Investing in Stocks, your guide to the stock market. First up, let's talk about the stock market. When I say stocks, I'm talking about buying a small piece of ownership in a company. Think Apple, Tesla, or even your favorite coffee shop, if they're publicly traded, of course. Why own a tiny piece of a company? Because when that company does well, their stock price goes up, and so does yours. That's how you make money with stocks. Buy low, sell high. There are a ton of ways to invest in stocks. You can buy individual stocks, which is like picking your own all-star team of companies you believe in. Or you can take the more diversified approach and invest in ETFs or mutual funds, which are baskets of stocks that track a particular index or sector. This is like investing in the entire team instead of just one player. One of the biggest advantages of investing in stocks is the potential for high returns over the long term. Historically, the stock market has averaged around a 10% annual return, which absolutely crushes inflation. But remember, past performance is not indicative of future results. The market can be volatile, and there are definitely risks involved. One of the main risks is market volatility. The stock market can be like a roller coaster with its ups and downs, and if you're not careful, you could lose money, especially in the short term. That's why it's important to have a long-term investment strategy and not panic sell when the market dips. Another risk is company-specific risk. If you put all your eggs in one basket and that company goes belly up, well, you can kiss your investment goodbye. That's why diversification is key. Spread your investments across different companies, sectors, and even asset classes. Stocks offer some amazing tax advantages that can really boost your returns over time. For example, if you hold your investments for longer than a year, you'll pay long-term capital gains taxes, which are significantly lower than the ordinary income tax rates you pay on your job. Getting started with stocks is easier and more accessible than ever before. Thanks to online brokerages, you can start investing with as little as a few bucks and even buy fractional shares of expensive stocks. But before you dive headfirst into the stock market, remember, it's crucial to do your research, understand your risk tolerance, and maybe even consider talking to a financial advisor. Personally, I think investing in the stock market through low-cost index funds is one of the smartest and most effective ways to build long-term wealth. Okay, so we've covered the basics of stocks. Now let's move on to the wild world of cryptocurrency, where things get really interesting. Chapter 2. Investing in Cryptocurrency. Hang on to your hats, things are about to get volatile. Next up, we're diving headfirst into the exciting yet often confusing world of cryptocurrency. Buckle up, because things are about to get interesting. Cryptocurrency is a digital or virtual currency that uses cryptography for security. It's decentralized, meaning it's not controlled by any government or financial institution, which can be both a good and a bad thing. The most well-known cryptocurrency is Bitcoin, but there are literally thousands of others, each with its own unique features and potential use cases. Some people believe cryptocurrency is the future of money, while others are more skeptical. Cryptocurrency has the potential for huge returns. We've seen Bitcoin go from a few cents to tens of thousands of dollars in just a few years. That kind of growth is unheard of in traditional markets, and while those massive gains are unlikely to be replicated, the potential for significant returns is still there. Cryptocurrency is still a relatively new asset class, which means there's still a lot of room for growth. As more people and businesses adopt cryptocurrency, the demand could increase, potentially driving up prices. But, and this is a big but, cryptocurrency is also incredibly volatile. We're talking about wild price swings that can happen in the blink of an eye. This volatility makes cryptocurrency a very risky investment, especially for beginners. It's not for the faint of heart, and it's definitely not something you want to invest more than you can afford to lose. Another risk to consider is regulation. Because cryptocurrency is decentralized, governments and financial institutions are still trying to figure out how to regulate it. New regulations could significantly impact the value of cryptocurrencies, either positively or negatively. Then there's the whole issue of security. Because cryptocurrency is digital, it's vulnerable to hacking and theft. And if you lose your cryptocurrency, it's gone forever. So, should you invest in cryptocurrency? Well, that's a decision only you can make. But if you're considering it, make sure you do your research, understand the risks involved, and only invest what you can afford to lose. Alright, now that we've explored the wild west of cryptocurrency, let's move on to something a little more tangible: real estate. Chapter 3. Investing in real estate. Building wealth. One brick at a time. Finally, let's talk about real estate. Real estate has been a popular investment for decades, and for good reason. It's a tangible asset, meaning you can touch it, feel it, and even live in it. Plus, it has the potential to generate passive income and appreciate in value over time. When it comes to real estate investing, there are a ton of different strategies you can use. You can buy a rental property and become a landlord, collecting rent checks every month. You can flip houses, buying low, fixing them up and selling high. Or you can invest in commercial real estate like apartment buildings or office spaces. One of the biggest advantages of real estate is that it's a tangible asset. Unlike stocks or cryptocurrency, which exist only as digital entries, real estate is a physical property that you own. This tangibility can provide a sense of security and stability that some investors find appealing. Another advantage is the potential for cash flow. If you invest in rental properties, you can generate passive income every month from rent payments, and as you pay down your mortgage, your equity in the property increases, building long-term wealth over time. But of course, like any investment, real estate has its downsides. One of the biggest drawbacks is the large upfront investment required. Buying a property typically requires a significant down payment, closing costs, and ongoing expenses like property taxes, insurance, and maintenance. Another downside is the lack of liquidity. Real estate is not as easy to buy and sell as stocks or cryptocurrency. It can take months to sell a property, and you may not always get the price you want. So if you need to access your money quickly, real estate may not be the best option. So is real estate right for you? Well, that depends on your individual financial situation, risk tolerance, and investment goals. Chapter 4. Which one is best for you? Finding your perfect investment mix. So, we've covered the three contenders in the ultimate investment showdown: stocks, cryptocurrency, and real estate. Each has its own unique advantages and disadvantages. But which one is right for you? Well, that's the million-dollar question, isn't it? And unfortunately, there's no one-size-fits-all answer. The best investment strategy for you will depend on a number of factors, including your age, risk tolerance, financial goals, and time horizon. For example, if you're young and have a long time horizon, you might be more comfortable taking on more risk with investments like stocks or even cryptocurrency. On the other hand, if you're closer to retirement, you might prefer more conservative investments like bonds or real estate. It all comes down to finding the right balance between risk and reward that aligns with your individual circumstances. If you're looking for a relatively low-risk investment with the potential for long-term growth, stocks are a solid choice. Investing in a diversified portfolio of stocks through low-cost index funds or ETFs is a great way to get started. If you're looking for a high-risk, high-reward investment with the potential for massive returns, cryptocurrency might be more your style. But remember, cryptocurrency is still a very new and volatile asset class, so it's important to do your research, understand the risks involved, and only invest what you can afford to lose. And finally, If you're looking for a tangible asset with the potential for passive income and appreciation, real estate could be a great option. Ultimately, the best way to figure out which investment is right for you is to experiment and see what works best. Investing is a journey, not a destination. Now that you know the pros and cons of each, where would you invest your money? Let me know in the comments below. I'm always down to hear from you guys and see what you're thinking. If you found this video helpful, give a thumbs up, share it with someone who might benefit, and don't forget to subscribe to Rich Mind for more insights and tips to help you succeed. I'm on a mission to make personal finance fun, engaging, and accessible to everyone. So hit that subscribe button and join me on this journey to financial freedom. Thanks for watching until the end, and I'll see you in the next video. Peace out.